Do you think investing is only for the rich or the highly educated? What if I told you that building wealth is actually simpler than you think? In this video, we'll break down the most important principles from the book, the only investment guide you'll ever need, in a way that's practical, powerful, and easy to apply. Stick around, because these 6 lessons could completely change your financial future. Let's dive in. 1. Live below your means. Explanation. Wealth doesn't come from how much you make, but from how much you keep. One of the key teachings in the book is that saving is the first and most critical step toward investing. If you're living paycheck to paycheck, you'll never have anything left to invest. Financial discipline begins with lifestyle control. Example. Someone earning $3,000 a month but saving $500 is in a better position than someone earning $5,000 and saving nothing. Cutting just 10% of your unnecessary expenses could free up a large sum over time. How to apply. Start by tracking your monthly expenses. Identify areas like eating out, subscriptions, or impulse buys that can be reduced or eliminated. Set a savings goal each month and make it automatic. Tips. Treat savings like a bill you must pay. Use budgeting apps like Mint or YNAB to stay accountable. Avoid lifestyle inflation as your income increases. Summary. Living below your means gives you the financial fuel to invest and grow. It's the foundation of all long-term wealth. 2. Avoid bad debt, like the plague. Explanation. High-interest debt is your biggest enemy. The book stresses that carrying debt, especially from credit cards, will destroy your ability to grow wealth. Before thinking about investing, eliminate toxic debt that drains your resources. Example. If you owe $5,000 on a credit card with 20% interest, you're losing $1,000 annually just in interest. That's money that could be compounding in investments instead. How to apply. Prioritize paying off high-interest debt. Use the avalanche method. Start with highest interest rate, or the snowball method. Start with smallest balances. Whichever keeps you motivated, stick to it. Tips. Avoid taking loans for things that don't increase in value. Negotiate lower interest rates or transfer to 0% APR cards. Cut up your credit cards if needed to break the cycle. Summary. Every dollar you save from paying interest is a dollar earned. Getting out of debt is the fastest, safest investment you can make. 3. You don't always need a financial advisor. Explanation. The book makes a powerful point. The average person can handle their own investments with just basic knowledge. Many advisors charge high fees that eat away at your returns. You don't need a Wall Street guru. You need simple, smart strategies. Example. Paying a 1% fee on a $100,000 portfolio over 20 years could cost you tens of thousands in lost returns. That money could have stayed in your pocket. How to apply. Educate yourself with reputable books, podcasts, and videos. Start small and use low-cost platforms like Vanguard or Fidelity. Choose index funds and ETFs with minimal fees. Tips. Look for fiduciary advisors if you do seek help. They're legally required to act in your best interest. Avoid anyone promising guaranteed high returns. Trust logic, not hype. Summary. You don't need to be a genius or hire one. With the right tools and mindset, you can take control of your own financial future. 4. Invest in index funds. Explanation. Index funds are the book's favorite investment vehicle. Why? Because they're low cost, diversified, and historically outperform most actively managed funds. They allow you to invest in the entire market with minimal risk. Example: buying an S&P 500 index fund like VOO gives you exposure to 500 top-performing U.S. companies. It's like owning a piece of the entire economy without the hassle of picking stocks. How to apply: open a brokerage account and look for index funds or ETFs with low expense ratios under 0.2%. Set up automated investments each month to build your portfolio steadily. Tips: don't try to time the market. Time in the market matters more. Reinvest dividends to accelerate growth. Review your investments yearly, not daily. Summary: index funds are simple, powerful, and proven. They're the ultimate passive investment strategy for long-term success. 5. Ignore the hype and stay the course explanation. The book warns against reacting to market noise. Media outlets thrive on fear and greed, but real investors stay focused and calm. Chasing trends or panicking during dips can ruin your returns. Example: many investors sold everything during the 2008 crash and missed the recovery. Meanwhile, those who held on saw their portfolios double or triple in value over time. How to apply: build an investment plan with clear goals and stick to it. Avoid checking your portfolio every day. Set rules for yourself, like only making changes once a year. Tips: turn off financial news alerts. Keep your emotions out of investing. Stay diversified to cushion market fluctuations. Summary: success comes from discipline, not drama. Tune out the noise, trust the process, and keep going. 6. Start now, no matter how little you have. Explanation: time is the greatest multiplier of money. The earlier you start investing, even with small amounts, the bigger your returns over the years thanks to compound interest. Don't wait until you have more. Just begin. Example: investing $50 per month from age 20 can grow into over $100,000 by age 60, even with modest returns. Waiting until 35 to start means you'll need to save much more to catch up. How to apply: automate a small investment every month. Use micro-investing apps like Acorns or Robinhood. Make it a non-negotiable habit. Tips: don't wait for the perfect time. It never comes. Focus on consistency, not size. Increase your contribution as your income grows. Summary: starting small beats, starting never. The earlier you invest, the richer your future becomes. Conclusion: you don't need to be rich to invest. You need to be smart, consistent, and patient. The journey to wealth starts with one decision, and you just made it by watching this video. So if you learned something valuable today, hit that like button, subscribe for more smart money guides, and drop a comment with the first step you'll take. Your financial freedom is waiting. Start now.